morning, all. Ira Epstein with your morning flash update, and this update is for the morning of Tuesday, the 12th of August, 2025, about 8:20 a.m. Central Time. I thought I'd just start off with the news of the day because that's where we're going. The NFIB Small Business Optimism Index up to 100.3 versus June's 98.6 and the 99 that was expected. But this is the news of the morning. The headline CPI came out right as expected. When you look at month over month, the core, it came in as expected. Energy prices, though, were down 1.1%, which probably kept the lid to a certain degree on the overall CPI. Food prices were flat. The prior month they had been up 0.3. That probably helped a little bit, too. Then when we go to year over year, CPI came in a tenth light. So this is why the market looked at things friendly. When you look at the core ex-food and energy CPI year over year, that came in at 3.1, right as expected. And the prior month, the prior month was 2.9%, allergy season. Redbook weekly retail sales headline, that came in at 5.7%. And it's been running about 5.5 to 6.25, so these were normal. Richmond Fed President Barkin speaking at 9. And President Trump has given a new name to E.J. Antony to be heading up the Bureau of Labor Statistics. Now, he has been extremely critical of the Bureau, so he's a logical appointment for President Trump. The Senate has to approve him. So you can imagine the fight from the Democrats will be severe, but given that the Senate's run by, in terms of votes, the Republicans, I expect them to get in there. Then the president also said 3 more candidates for the Fed chair are being considered. So he's got a pretty big board going there. The question is, by the end of the day, how's the market going to look at that CPI? I want to make a point here as to my view. Think of when the tariffs kicked in. Think of when the president had his Liberation Day, then they were going to kick in April. How many companies do you think front-loaded their imports before the tariffs kicked in, and they're still drawing on them? So even though we see the core CPI year over year going up to 3.1%. And if you break the numbers down, you see it going from 0.2 to 0.4, 0.6 up to 1.1 in some of the numbers. I think that's what you're dealing with. Eventually, those inventories will be replaced. You're going to have to look at the numbers that come out in the different reports as to what inventories look like. And as soon as you see the inventories, which are being depleted, starting to rebuild, you know that price inflation is probably coming back to a degree. Now, we're looking at the gold market a little bit lower off the news. Silver's down a little bit, but not quite as much as gold. Copper's up because we gave China another 90-day extension. And that, by the way, is also taming inflation to a degree. Yet, even giving China that, you can see how the market is still down. I'll tell you, I'm not surprised to see energy lower. You lost the embedded reading for a flash, and then it went right back down, similar to what happened in the wheat. If you look at last night's wheat reading, you lost the bearish embedded reading. Right back down this morning. We had a lot of rain in the Midwest. There's more due today. Any crops that are in the corn, the soybean areas, they're going to be in pretty good shape in the Midwest with all this rain that we've been getting, and I don't think it's excessive at this point. What's the dollar going to do with this news? Because what happens now is, what is the Fed going to say without inflation really running hot? They're fully tuned into the labor market. Does this guarantee even a bigger shot at the September? And then maybe 2 more cuts before we get to the end of the year. So which way does that go for the dollar? Does that drive the dollar up or down? The initial reaction off of the low inflation number was the dollar dropped, but it has since been coming back up, and you can see the markets are dilly-dallying. Keep in the back of your mind, this is that time of the year where a lot of traders take off. I call it the B-League traders coming in. It's part of the reason why you're losing some of the volatility in the market as well. I want to remind you that you have a special report of mine up on the website, and it is on the gold market. It'll be there through the end of business, I believe, on Wednesday night. Then it comes off. I have a dollar report I'm doing right behind it. In fact, it might come out while that's up on the site. So you're going to get my commentary. You're going to get seasonal charts from Moore and SeasonX, one of my favorites. You're going to talk about the impact of world events on the gold right now. We're going to talk about all of this right in the place where it's at. And I do think you're going to get some shots to the downside. Now, I want to be clear. I give you also the price counts in all this to give you an idea as to where this market is going. And so far, the price counts in gold are still pointing to the upside. If you take out the most recent lows, they're reestablished to the downside, and that's where you can have some problems come in the market. Until that happens, you're still pointing, as my opinion, to the upside, and I think that's fairly interesting at this point. In any case, you go to iraepstein.com to see it. You can move your cursor to the top up here. You'll see an icon. As soon as you're on the website, just look on the left. That's where the report is. I'm Ira. Have yourself a great day. I'll catch up with you all at the end of the trading day.